All right, nice, we're live. Just fingers crossed that we don't get any lagging. If you can't hear me, just let me know in the chat. I just want to make sure people can hear me. Thank you, Aaron. Appreciate it. Much appreciated, family. All right, it's 8 o'clock. So a few people are going to be rolling in. All right. So first things first, and we're going to go back to the basics, simple concept. I feel like a lot of people try to skip ahead, especially when they're learning like ICT's concepts. Sunday's opening price is your best friend. I guarantee you that. And I'm not even trying to lie to you or persuade you, but Sunday's opening price is legit your best friend. There's nothing else better than Sunday's opening price when trading the weekly range. Now, Sunday's opening price is naturally going to tell you where your overbought and oversold conditions are. Once you have that figured out on your chart, there's nothing that can stop you, honestly. The only thing that can really stop you is your risk management and your psychological greed and over trading. So we can see here, Sunday to Friday, and we draw this line all the way across. You can see that this is a premium and this is discount. Now, starting off with Monday, you can see price is well above Sunday's opening price, and it runs up. Now, normally I would skip or opt out of Monday, especially if I don't know what the weekly draw is going to be. I would skip Monday. But we can see here on Monday, it does drop down below midnight opening price for a bit and then runs higher. Going into Tuesday, we can see that price runs out the previous daily high right here. So it takes out Monday's high. Now, what's above the previous daily high is buy side liquidity, right? The market is going to draw up into that because there's buy side liquidity here. So what does the market do during Tuesday? It drops down below midnight opening price and then rallies all the way up here. Now it's in a premium because it's above Sunday's opening price, and it's in a premium because it's above midnight opening price. Now, I know many people will be asking, what is midnight opening price? Midnight opening price is 12 a.m. in New York Eastern Standard Time. Price runs all the way up here, and you can see that it takes out the previous daily high, which is the buy side liquidity. And after taking out the buy side liquidity, what does price do? It runs down quickly. And we can see what session is that occurring in that time period. That's London close, right after New York session. You can see right there, boom, runs up and comes short. Even breaks it during the London session. So you could have gone short here, or you could have gone short here. But both instances, we are both above midnight opening price and Sunday's opening price. That's a high probability sell setup. So if you're an intraday trader and you're looking for some type of short setup here, you would want to try and sell above here and also be above here. So you also want to pay attention to Sunday's opening price, because I've noticed there are people that have said that you don't need to pay attention to Sunday's opening price. And I don't think that is correct. I think that's false. I think you should be paying attention to Sunday's opening price. Price sells off all the way down from London close. It sells all the way down. Going to Wednesday, you can see here it was choppy. It was sideways. So let's say you won no opportunity here. And then you go into Thursday. Thursday comes up above midnight opening price. 12 a.m. That's Thursday. And then it runs where? Back down below Sunday's opening price. Now, as soon as price gets down here, are you still hunting for sell setups? No, you're not hunting for sell setups anymore, because we know that the commercials themselves are not permitted to sell at a discount. They are permitted to what? Buy. It's in a discount, it's oversold. So more than likely, the commercials are going to be looking for some type of buying opportunity here. So you'll see that price is going to run back up above Sunday's opening price once again, and it's going back into a premium. So now we're in premium territory again for the weekly range. We're crossing over this 5 p.m. New York Eastern Standard Time line, because I know many people around the world may be asking, what price point is this? This is 5 p.m. New York Eastern Standard Time. Price runs above it. You get consolidation throughout the Asian session. And then once again, you see a quick drop down out of a premium down into what? A discount once again. And you have a perfect A and D set up here. So we can see here, you look specifically at it, accumulation, manipulation, distribution. That accumulation right there. Here's your short-term manipulation occurring here between 2 a.m. and 5 a.m. And then you get your distribution going up higher during New York and the London close. You can see right here after 10 a.m., price still continues to rally higher. But notice where it's looking for its sponsorship as well. It's finding sponsorship below midnight opening price as well. We are above Sunday's opening price, but you can see for the day itself is dropping below 12 a.m. opening price, which is a discount. And then it rallies higher and trends higher for the rest of the day. So it's accumulation, manipulation, distribution. Now, this setup does happen to form pretty often. It may not be on the same pair that you're watching, but it appears on many pairs over weeks, over years in time. So you can see it takes out the low first, takes out sell side liquidity, then it runs up and it takes out buy side liquidity. Makes the low of the day right here at 3 a.m. At 3 a.m. pivot right there. 3 a.m. is the last point it makes the low, and then all of a sudden the market turns around. So everybody that was once going short here on the breakout, right, price was going sideways, 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 and then finally it drops down. Everybody, retail is trying to go short here. And then 3 a.m. kicks in, and then all of a sudden the market turns around fast too. This is a 1 hour chart. So this, for the entire hour, it was just up price action, just buy side the entire way. And anybody that was going short here is now probably going to be back at break even and then eventually in drawdown. The way I like to play these accumulation zones is if it breaks the low first and it comes down, and you can see how it's strategically going below Sunday's opening price discount. You can see how the confluences are adding up around it too. So it drops down below midnight opening price and it peaks back below Sunday's opening price, discount buy right down here. Ideal buy. Price then runs back up here. Now let's say you missed this opportunity down here. What can you do? You can simply place a buy limit at the Asian session high and then place a stop loss below the Asian session low to ride this a little higher. So it would look like this. You would go long here once price gets back up there, and then you have your stop loss at the Asian session low, and then you'd be looking for some type of short-term swing high, either on the lower time frame. So since if you're looking at it from the hourly perspective, you want to scale down to the 30-minute or the 15-minute to exit your trade. So your entry time frame and your exit time frame are going to be different. If you're entering on the 1 hour, scale down to the 30-minute, the 15-minute, or even the 5, 3, or 1 minute, whatever time frame you like, has to be less than the time frame that you're entering on to scale out of your position. That's how I would play that personally. So as you can see, this is the weekly range surrounding Sunday's opening price. This is overlooked, right? This is very underrated by a lot of traders. They're not even considering this at all. You don't hear, I'm not saying you don't hear anybody talking about it, but the informed traders are. The uninformed traders are not including this on their chart throughout the week when they're trading. Because if I was trading this, I know that I should not be looking to I shouldn't be looking for a buy here. I shouldn't be looking for a buy here. I shouldn't be looking for a buy here. I shouldn't be looking for a sell here, and I should not be looking for a buy here. It easily puts you on one side of the market. Are you a buyer or are you a seller? Now, this week was range bound, meaning it was back and forth. It wasn't specifically going in one direction and then running away. So you could tell that this weekly candle was small because look at where the open is and look at where the close is. It's pretty close to each other compared to other weeks where the open and close has a larger distance in between. You can already tell that the weekly chart or the weekly candle is much larger because the open is farther away from the close. There's a larger range expansion there. Yes. JR, how do you determine weekly bias? All right. So weekly bias, I'll jump into it real quick. The way I like to do it, if I would clear this chart, go on the weekly chart. There's two ways I like to do this. Did we respect a recent PD array? That's normally what I'm going to be looking at first. Oh, daily bias. Okay. You want daily bias. All right, no problem. I want to get a fresh chart for you then. Let's say we're looking at the daily chart. I want to make sure the stream is still going. Can you guys still see my screen? Just let me know in the chat that everything is going swell. I don't want to miss anybody. I don't want to waste your time. Your time is very valuable to me. Time is something that you can never get back. Let's wait for somebody to say something. Appreciate it, Aaron. Thank you, Aaron. Appreciate you. So we can see daily bias, normally what I'm using. So there's two ways I like to do it. If the market is trending and price is breaking the previous daily high, odds are it's going to keep going that way. So if he broke out of consolidation zone and is trying to trend, it's going to keep breaking previous daily highs or previous daily lows. So if you were to look at some price action here, you can see here, price breaks previous daily high, right? Then what happens the next day? It still runs bullish. What happens the next day? It runs bullish as well. Look at this. Price breaks the previous daily high and low. So this is outside bar. We would skip that. But price takes out the daily low here. I would go short. And then the next day I would go short again. Thank you guys. I appreciate it. But the second way I would do it is I would look at the most recent PD array that we have in price action and where my liquidity draw is going to be. So let's say we're looking at the chart here. I can see obviously the DXY has a swing high up here. And we just formed a swing low here. At this point in time, if you were looking at the chart and you wanted to range or speculate where the price is going to go, you're going to ask yourself, what are the odds of price coming to this high here? And what is the odds of price coming back down to this swing low? Now, I would favor the swing high getting broken because of what? We are in accumulation. We broke the accumulation zone to the downside, and there's a sharp turnaround. Notice this. There's a market structure shift here. There's speed here. There's a large candle running all the way up here. It closes, the next candle opens and runs higher. It leaves a gap open. So in my mind, I'm telling myself, okay, market structure should be bullish. And I need to see a higher swing low form because this in itself is a swing low. This potentially is the new swing low. That's a higher swing low. Now I want to see price now reach up and take out this swing high. This is the short-term swing high that we have here. 1, 2, 3. If price gets above this, then I know that we're still continuing to go higher. So that means I'm going to be looked to be a buyer either Monday, Tuesday, Wednesday, below Sunday's opening price each week during the month. That's what I'm looking for simply. That's exactly what I'm showing you here with the DXY. Go back on the hourly chart. If I'm bullish for the week, let's say I'm just simply bullish for the week. Don't mind where price action has occurred because this is all hindsight. If I'm bullish for the week, I cannot buy Monday. I cannot buy on Monday and I can't buy Tuesday and I can't buy Wednesday. The only day I was permitted to buy was Thursday and then also Friday. Those were the only opportunities I got a chance for a buying opportunity because price is below Sunday's opening price. So if I was bullish on this weekly candle, my buy setups will only have formed in Thursday and Friday. I would have missed Monday, Tuesday, and Wednesday. Now that may sound awful. Some people. Some people might say, "Oh, dang, I could have made a lot of pips here, made pips here, made pips here." That's possible. You could have had the potential of making some scalp opportunities, but for the high probability odds to be in my favor, I would have the discipline and wait for things to settle where I need it to settle. I needed price to settle here. If I wanted this weekly chart to go up or the weekly candle to go up, I could only buy in these 2 days. These days were no buying opportunities. None. Regardless of what the price action did that day, I could not buy because it simply wasn't below this price point. If I was looking for sell opportunities, yes, I could have brought on all these days. I could have sold. I'm sorry. I always say things backwards. I could have sold on these days. These are the days I would have looked for selling opportunities, especially if price broke a previous daily high, like Tuesday. Tuesday was a great example. It's above Sunday's opening price, and it broke previous daily high liquidity, buy side liquidity, and it's above Monday's midnight opening price. That's a great setup for you to do what? To potentially go short above a previous daily high. And when is it occurring? It's occurring during a session. It's not the session that's indicated in the highlighted areas, but there is another session here. It's London close, 10 a.m. to 12 p.m., which is normally going to be what? A reversal. And you can see a high probability reversal turned out right there. 10 a.m. to 12. If you could get it to 12. There we go. We'll break it down shortly too. We'll break down the whole day. You go on the 15-minute time frame. Where price stands right now, there is no way I can be a buyer. Impossible. Because like I said, if you're going to be a trader, you want to trade just like the commercial speculators. These people are in the market to make money. They're not here to lose money. Yes, they do lose money, but they can mitigate their losses all day. They can have an open position longer than any of us in the chat. Any of us. Infinite amounts of liquidity that they have. Without their liquidity, we wouldn't even have this price action. I want you guys to think about that. Without their liquidity, there would be no trading in Forex. There would be no stocks. There would be no cryptocurrency. Someone has to be the liquidity provider. And they're the liquidity provider. So without them, this market would not move. We're just playing in their sandbox. You can see price opens up. We're still above Sunny's opening price. Now we're above midnight. Soon as price gets above here, the light bulb starts to go off because I see we broke the previous daily high. So we took buy side liquidity. If the market is most likely going to give me a high probability sell, it's going to happen after I broke the previous daily high. And if the market is going to give me a high probability buy setup, it's going to occur after I broke the previous daily low. But look at where we are in price in retrospect. We're above Sunday's opening price. This makes things so much clearer. I didn't have any indicator to tell me that I was overbought. I didn't have anything to tell me, oh, the moving average just crossed over. I need to be selling here. No, this line is telling you where overbought is. Price comes up here, I'm selling in London. Let's say I get the short position here, have a stop loss of 10, 15 pips above this high. And I would hold all the way out through New York session, or I will hold till 12 p.m. What does A? So the A, that's the Asian session size. That's the pip size of the Asian session. So the indicator that I have, I'll show you guys. Even though I say indicators is detrimental, I'm using a session indicator here. It's essentially just showing you the size, if I can find it for you. Where is it at? Black, border, blue, 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 blue. Because everybody wanted to know the settings. Yeah, it's just the size of the Asian session. I could turn it black too. It's 14 pips or 14 ticks. Price runs up. London close. High probability London close reversal right there. 10 a.m. It literally starts at 10 a.m. 10 a.m. right there. That candle there. 10 a.m. It gives one break one more time, and then it just drops all the way down. It'll play it out. And look how quick they move this price back below midnight opening price. They don't want price to stay up here in a premium. You can clearly tell by the candles and the size and the speed that they're moving price. They don't want price to stay up here. They don't want price to stay here. Why? Because they don't want to offer anybody else the chance. Think about this. They don't want to offer anybody else the chance to get that opportunity to sell above midnight opening price again, especially after a specific time. Because, of course, the algorithm has a time frame and it needs to finish the price action for the day by a specific time. And it's doing that right there. London close. It's time to drop. Let's go. We got to get the party going. It's oversold. Sorry, it's overbought. I'm always saying things backwards. It's overbought because it's above this price point here, 12 a.m., and it's above 5 p.m. Sunday's opening price. You have a high odds sell set up here. Now, I know in hindsight, it looks easy. I know it looks easy. But after enough practice and trial and error, you'll see these setups play day in, day out, day in, day out. And you're like, wow, I know when to stay on the sidelines and when I should be jumping into the market. Every day is not a trading day. This was definitely a trading day. The opportunity presented itself. This is major. A previous daily high being broken, there's something going on in the marketplace. And as you can see, it drops. So let's just move on to the next pair. So we're going to look at UJ. Take off the session indicators. We'll go back on the hourly chart. And I like to look at it on the hourly chart. It just looks easier on the eye. You're able to see all the days. Nice. That's good enough. I think that's good. Yeah, that's good. Because you can see that says Sunday's opening price. Just for the sake of the video. There we go. Sunday's opening price. Once again. Price comes up. Are you buying here? Are you buying here? No, I can't buy here. The only opportunity that I should be looking for is probably a sell setup. That's Monday. Tuesday. Are you looking to buy here? No, you are not looking to buy once again. You're probably, odds are you're a seller this day. Intraday, you're looking to a sell setup. And you can see itself, look at how price comes above in a premium for the day. So Tuesday's premium is above midnight opening price. Look how the candle comes above it. Doesn't give anybody an opportunity to really get a nice discount. A nice premium sell. It only peaks above it multiple times. One time, two times. It comes close, really close. Because you notice sometimes ICT would tell traders sell at, right, at midnight opening price, close to midnight opening price, or above it. Because there are moments and times where it does not come back above it. It comes really close. And this is just an example. It comes close to midnight opening price. So when ICT is telling traders that, he's telling you that for a reason, because it may not come back above here one more time to give you the opportunity to go short. And you can see how price drops back down into what? Discount. Once again, it's oversold for the week. What are the commercials doing here? Odds are they're going to probably look to build in some net long positions underneath here because it's at a discount. We get consolidation all the way through central bank Steelers range, all the way through the Asian session, consolidation the next day. Look at the buy opportunity that you get again. I'm going to do this again. I'm going to put on the sessions indicator so we can see it. This is AMD. That's accumulation, manipulation, distribution. Once again. And we'll look at the day. We'll break it down the whole day so we can look at it together. Go down to the 15-minute time frame. Lengthy in pips. I personally would avoid trading the London session. That doesn't mean the London session cannot be tradable. It's just not ideal. It's larger than 45 pips. It's larger than 40 pips. You really want the Asian session to be moving sideways like this. Moving sideways. You can see it does move. It starts moving sideways at the end. Last hour, probably from 11 to 12 or even 10 to 12 midnight, it moved sideways, which is still a good sign. But overall, I would like to see the entire Asian session move sideways and be less than 45 pips and larger than 20 pips. So that means I know ideally the London session should be great for me to trade. If it's larger than 40 pips, I'm going to bed. I'm going right to bed. I'm going to wait for New York session. I'm going to set an alarm for 7 a.m. or 8:30 CME open or a news embargo lift, and I'm going to wake up and I'm going to try and trade the New York session instead. But as you can see, classic AMD. This is your accumulation. Just put it an A there. The A is for accumulation. I don't want to throw anybody off. The A is for accumulation. The M here is manipulation. And the D is distribution. Once again, this is a whole nother pair that we're looking at. VJ. Same pattern forms again. It takes out what? Sell side liquidity first. Everybody is trying to go short on a breakout. But why is the sell setup not optimal? Sell what I'm telling you guys about Sunday's opening price. Why should I not be selling here? Anybody in the chat could say something. I'll just wait till somebody types something out. That's correct. We're in a discount. We're in a discount. Why are you looking to sell? You see how clear that is? You're in a discount. You're in a discount for the day. You're below midnight opening price. That opening price is right here, that up candle here. Zoom in a little more. You're in a discount for the day. Why the hell are you looking for a sell setup here? Impossible. Doesn't make sense logically. Anybody looking for a sell setup is most likely going to be faced with higher prices. They're most likely going to be in drawdown. It's not going to be in their favor. I'm not saying you can't find a sell setup here or a sell scalp here. You can. You can probably find a 5 to 15 pip scalp here. But odds are it's going to go against you eventually throughout the rest of the day. As the day progresses, that short position is going to hit its stop loss because it's below Sunday's opening price, this dash line here, and it's below midnight opening price. Why are you selling here? Think about this. A lot of people overthink this logic. Why are you selling here? A equals 14 means A is. Yeah. Thank you, Aaron. Right here, that A here just is indicating the pip range of the Asian session is 57.3 pips. For anybody that's watching and just confused about that, that's just the number of pips the Asian session is. But I would not look for a sell here. I'm looking for a buy. And everything lines up so perfectly for the buy opportunity. It takes out the Asian session low. So you took out sell side liquidity. Check. Sell side liquidity is taking out from the low. Now, what is left? There's buy side liquidity up here. We never break it. I'll show you right here. Right there. We come close to it, but we never get there. You see? We never get there. A lot of traders are probably looking, oh, I'm gonna buy, I'm gonna buy, I'm gonna buy. And what happens? They try to buy, they look at this as this is a buying opportunity. What happens? At 2 a.m., it turns around quickly. London open, 2 a.m. essentially is European open. 2 a.m. Europeans come in. Please again, can you come again? Had a network glitch. No problem. What's your question? If you have a question, just type it in the chat and I'll definitely look over to answer it. Not a problem. But as you can see here, it gets above, it doesn't get above, it gets above midnight opening price. Yes. And it gets above Sunday's opening price. So you can see how they're selling in a premium shortly, short term at least for the day. You can see it's above midnight opening price and it's above Sunday's opening price. There's a sell opportunity, price drops. But most of the traders that saw UJ for the day was looking to go long, but they're too early. They're too early. They're not patient enough here. They're jumping the gun way too quick. It is going to go long, but you just have to wait for the best opportunity to get the buy position. The buy position was most likely going to form below. If I get the arrow down, below here. The buy position is not going to occur up here. It's less favorable. Anything above this line is less favorable. You're not looking for a buy opportunity here. You're looking for the buy opportunity below midnight opening price. That's it. Price comes down, takes out the Asian session low. Now, how could you play this? You may ask. You can set a buy limit at the Asian low and have a stop loss of either 20 to 40 pips. Because sometimes you will have the London session reach really low before running higher because they're trying to run all the sell side liquidity as much as they need to then gear price higher. And then you'll hold to the Asian high. That's a quick, easy way to go long. Buy limit here at the Asian session low. As soon as it breaks this, it's below midnight opening price and it's below Sunday's opening price. You're in a discount. The trade setup is favoring yourself. If I could get it to stay here, that's close enough. And then you go back long, aiming for the Asian high. You're done. You might have made 10, 15, 20 pips and you're done for the day. Don't get greedy because some people will try and get back in here and try and play it to the downside now. And they're going to try and sell, right? People are going to try and come in here, make profit on the way up, and then it gets up here and they're probably going to look to sell. May not happen. Take your profits and go. You can see it comes back down and then it goes back up. But look at the location. It's so methodical. Look at the location. It's below midnight opening price again. And this is outside of any of the kill zones. It's in its outside London close. 12 p.m. I'll mark off 12 p.m. so you guys can see it. That's 12 p.m. But look at what the market is doing. It's not doing it randomly. It's not buying pressure. It's not selling pressure. I appreciate those that say those terms, but those terms are it's incorrect. Unfortunately, it is incorrect. It's not buying pressure and it's not selling pressure. It's either the market is cheap or the market is too expensive. That's what's going on here. And then the market is cheap enough. It's cheap enough again for them to buy. Yes, it's a double confluence. That's all you're looking for. It's two confluences that you're looking for your trades to be in your favor. I'm not selling here. That's why I asked, would you sell if price was here? If price was right here, Would you still be looking for a sell setup? No. You're looking for a buy setup. You're below midnight opening price and you're below Sunday's opening price. Buy. Don't be afraid to buy. In order for you to learn these concepts, you have to play in a demo and practice these ideologies and practice these concepts. Then you'll understand, oh wow, the market is actually not random. Wow, they're actually getting in at a cheap price to run price higher. It's not random. Not at all. So we'll go back to the hourly. I'm going to play it out so you can have it. Like this. And this is where we are. Take off all this. I like the charts to be clean. A lot of people's charts are too messy for me sometimes. I'd be looking at people's charts. I'd be like, dang, you got a lot of stuff on your chart. Got my eyes looking left, right, down, up. Same thing here. Look at Thursday. What's happening on Thursday once again? It's not magic, guys. Every week, you can do this every week, and you'll see the setups. You may not get it for that specific day. You're going to miss a day. You're going to get it wrong. But eventually, you keep to the system of overbought and oversold, you're going to find winning trades. What does price do here? This is exactly what I was talking about yesterday. What does price do here? Takes out the previous daily low. Wow. Previous daily low. What's below this low? Sell side liquidity. Sell side liquidity is taken, and what happens? Price rallies. It's in a discount, and it's a discount for midnight opening price for the day. Look at how it takes out the previous daily low, Wednesday's low that it made. It takes it out, and then it runs higher. Everybody thought to themselves, wait, it took out Wednesday's low. It should keep going lower. No, not at all. Not at all. Not a chance. Same thing here on Friday. Friday's where? Because after Thursday, it runs all the way up here. And I'm going to see where I made the low. New York session reversal. Right there. New York session reversal. Comes all the way back up. London close. It keeps trending in that direction as well. Asian session. Consolidation. Breaks to the downside and runs up. It looks like it could have been an AMD setup. If we had a longer Friday, right? Accumulation, manipulation, distribution, London close runs up, and then it stops to give out because the volume is dead by this time, and it's the end of the week. So there's no excitement. But this in itself looks like an AMD setup. Accumulation, manipulation, distribution. It wants to get above the Asian session high. This high is still intact. There's buy side liquidity sitting above this high. I wouldn't be surprised if next week the price either opens up or gaps up or speeds to this high. I wouldn't be too surprised if it does that. And as you can see, it's the same thing. Simple concepts. Now, if you're an intraday trader, like I said, you can make money doing this. It all depends on how you trade. Are you risking too much? Are you risking more than 2% of your account every single trade? Are you not reducing your risk every time you take a losing trade? So when you lose a trade, are you keeping the same risk on, or are you decreasing the risk and cutting it in half until you recover that loss? Then you can go back to risking 2%. Let's check out. We got GU. And I'll run through this one up. Not too fast, but I'll run through it. Same thing. Just looking at this, you can see it takes out Tuesday. Tuesday takes out Monday's low. It's so crazy when you see this, man. Tuesday takes out Monday's low. Tuesday takes out Monday's low right here. Where's Tuesday? Where is Tuesday's price action occurring? Below midnight opening price and below Sunday's opening price. It's in a discount. High probability buy every single time. Takes out the low, and where does it buy? It buys in New York session. London close reversal, price runs higher. Comes back and takes out the buy side liquidity above the Asian session high. You can see how tight this consolidation is. It's 20 pips. It only takes out the Asian session low. It leaves the Asian session high intact. There's liquidity here. Odds are The market for the rest of the day, it's going to draw here. Not saying every single day you're going to see price return back to the Asian session high or the Asian session low within one session. It may do it the next day. And for example, you can see here for Wednesday, look at the Asian session here. Look at the Asian session low intact. No, it's not broken. There's sell side liquidity below it. Price runs all the way up here going into Thursday. It's in a premium. There's a glitch. You guys can't hear me. I hope everybody can hear me. I'm spitting some fire right now, man. Well, I'll continue. Unless somebody says something that something's wrong, just let me know. You can see how this Asian session low is still intact. Look at the Asian session high. It's broken instantly. Boom. Price goes up. Price comes back down. And where does it come back to? This Asian session low. It breaks it in Friday. It's almost as if the Asian session is like a magnet, which it is, because there's liquidity on both sides, either the high or the low, especially if the Asian session is in tight consolidation like this. Comes all the way back down to get to this liquidity back here. And where does it run? Back down to Sunday's opening price. So let's thoroughly go through the week. Sunday, we skip Sunday. We're not trading Sunday. Just start prepping your charts, seeing what things that you're looking for. After that, Monday trades. Let's say we skip Monday, because normally, because some people would say two different things. So I read Larry Williams' book, Long-Term Secrets of Short-Term Trading. He did say specifically that Mondays tend to be higher probability days. However, ICT said that he would opt out of Monday if he didn't know what the weekly range was going to do. He would wait to see what Tuesday would do. He would let Monday trade, and he would miss this opportunity and wait for Tuesday, which sometimes does play out. So I can't sit here and try and pick sides, because the market isn't just one way. It's not one dimensional. It's multi-dimensional. There's many ways the market moves and flows. Monday, its low is rated, it takes it out, and it runs higher. Wednesday, we're looking for what? A sell opportunity. Price runs up here. It looks like New York session, probably either New York session. Yeah, New York session. We put it on. New York session has to decline down right here. Never gets back down below midnight opening price. It doesn't get back down towards the Asian session low. But there would have been some type of sell setup here going on, because it's in a premium. You're not looking to buy here. Not saying that it can't buy. I'm not telling people that the price action won't continue going higher when it's in a premium. But when it comes to the earlier AM sessions, like the London and the New York session, odds are you're looking for a sell setup in this session and this session, and even London close. You're looking for a sell setup in all three of those sessions. You move on to this Thursday, price runs up above midnight opening price, runs into New York, London close reversal, high probability, comes all the way down. Now, I did post something in the Telegram channel, and I want you guys to check this out. You have this mitigation block. So if you check this out, right here. What is happening here? There's excitement in the market. Now, why is that excitement? It's excitement because it's quick and it's fast. It's a large range candle. Now, I say this all the time. This analogy may go over some people's heads. It may make sense to you, but to me, it does make sense. The analogy, for me at least, when it comes to the sizes of the candles, a small range candle is not exciting, doesn't get people stimulated, doesn't get the neurons firing in the brain. When you see a small range candle, most average people are going to be bored. They're just looking at boring price action. But when you see a large candle like that, that gets somebody stimulated. Their neurons are firing. They're thinking to themselves. They're texting their best pal, yo, did you see Apple move up 200% today? Did you see Google drop down 200% today? Yes, I did. And that gets people talking. The public starts talking. And what happens? They start chasing the price, right? Everyone saw GU go like this. And what happened? Odds are there are going to be folks out there in the world that saw GU drop this fast. They went short. They started going short. I'm missing the trade. I need to go short. So they go short. And what happens to them? They get back into drawdown because price turns all the way back up. All the way back up. Now the large range candles, it's like a favorite toy to a dog. People start The dog starts salivating. It gets excited. It starts wagging its tail. It starts barking because it sees this. I don't care about that. To me, I don't care about that. I'm ignoring this. I don't care about this drop down. Everybody else, for some reason, is going to text their pal and tell each other, yo, did you see this massive move? Yeah, of course I saw it. Who didn't see it? But what I'm more concerned about is what happened before this large move. This is what happened before the large move. You had these two down closed candles before the drop down. Right there's your mitigation block. These two down closed candles before the up move and then the quick repricing down. This is a market maker. Oops, market maker. Market maker repricing. As we know, it's not me and you that's selling and making price drop this fast. So it's clearly a market maker making price drop fast, right? Price drops really fast. And what happens? Everybody's like, oh my gosh, I need to chase price now. And they start chasing price, which is foolish of them. You need to wait. And what happens? Price comes all the way back up. Price goes like this, comes down, up, speed. Everyone's chasing now. Then the market opens, consolidation, makes the low of the week here, right? Then comes up, consolidation, boom. Finally returns back to where all the excitement was. And what happens on Thursday? Price drops. Price drops. But everybody was worried about this move and trying to go short. They shorted way too early. Once you saw this candle, you missed the move already. I promise you, you missed the move already. You've already, odds are, 80% of the time, you've missed the move. You're not gonna get that short opportunity. When you opened up your MT4 and you looked at your chart, you opened up TradingView and you saw that large candle going down for the 1 hour chart, you already missed the boat. You missed the party. But what are people going to do? Oh, I'm gonna open up an option call. I'm in an option put. I'm gonna go place puts into Google and put puts into Apple. You missed it already, my G. You missed the setup. You need to be patient. You need to wait for price to come back. And then you find your short opportunity. And where is the short opportunity occurring? Once again, it's all stacked together. It's not random. Premium comes back to the basics once again. Comes back to the basics. It's selling above the opening price for Sunday, and it's selling above the opening price for Thursday. Double confluence right into a mitigation block. Picture perfect ICT content right there. And you could have killed it right there with a short opportunity. And then Friday, you can see consolidates and then drops down. But where is it consolidating? It's consolidating above Sunday's opening price and it's consolidating over midnight opening price. It finally drops down. I like to avoid Fridays. Fridays can be very confusing sometimes. We'll move on. Looking at gold now. Gold. Been tracking gold for a while for you guys. And track it for the rest of the month. This is a nice one. We can clearly see, with hindsight, where the sponsorship is coming. The sponsorship is occurring above Sunday's opening price once again. Thursday makes the high of the week and it sells off very quickly. Trades back into what? This inefficiency here. The start of it. So if you draw it out, you see it right there. Hits it. Boom. And then it goes short. Do I know how far it's going to fill into that inefficiency? I have no idea. No. But you can see how it was dynamic there. Hits it, then it runs lower. Once again, it's above midnight opening price, premium, and it's above Sunday's opening price, premium. Sells off. But if you look at each day, because we had a 3-day bullish price action, look at what happens after each day the high is broken. Instant sell off. broke above this high, buy side liquidity. After buy side liquidity is mitigated, price drops back down. And where does it drop down to? Oh, let me guess. Back down to Sunday's opening price. And it does. Drops all the way back down to Sunday's opening price. And it taps right below it. Right below it. And then it runs back up. Look how quick it runs away from it. It reprices itself because it goes into a discount once again. Runs back up. Same thing here. Tuesday. Look at Tuesday. Tuesday's high. Boop. Tuesday. London runs the high. Sell setup. Boom. Sells off. That never returns back down to discount. Still above here. So you're still probably hunting for shorts. Going into Thursday. Price takes out the previous daily high again, one last time, and finally returning into that large candle that everybody was trying to chase. That large candle here finally digs into that range. From here to here, if we're going to define it like that, finally gets into that range. And what does it do? Hits that range, it sells off very quick. But that's all while you got to understand the confluences here. It's all adding up. It's above M.O.P. Midnight, 12 a.m. New York Eastern Standard Time, premium. And we're above 5 p.m. New York Eastern Standard Time, Sunday's opening price. And we broke the previous daily high. And when is it occurring? Let's see. New York session. New York session reversal, London close trend, all the way back down to discount. Once again, random, right? The market is all based off of RSIs and moving averages and Ikomoku clouds, all that nonsense that people put on their chart. That's garbage. That's garbage. Just because you got a fancy guy with a suit on and a tie telling you, oh, the moving average crossed over. What moving average? It's garbage. I just showed you where price was most likely going to give you a sell setup and why. Based off of what? Technical analysis. I'm not even talking about fundamentals or macro perspectives. I'm not talking about macro data or how net long or net short the commercials are. I'm not adding any of that. I'm only including price action to show you this. Doesn't take a rocket scientist to see exactly what's going on here, especially when you start labeling a chart. Because when you look at the chart like this, you're like, what is going on here? It would make no sense. It would make no sense to traders. When they look at the chart like this, they're like, this is just random candles going up and down. No, it's not, because you don't know the true movement of price. As soon as you put this on, you get this whole different lens, whole different perspective of what the market is doing. But I'm telling you, they'll sit up here, put a fancy dude in a tie and a suit, and tell you, yes, you need to use RSI. You need to use moving averages. Garbage. All garbage. And that's gold, right? Yeah, that's gold. I think I did all four that I wanted to talk about. But you can see every single time. Bring yourself back home to this. This is going to help you out. Keep you on the right side of the market. On Monday, would I be a buyer or a seller? I'm going to be a seller. On Tuesday, would I be a buyer or a seller? I'm going to be a seller. On Wednesday, would I be a buyer or a seller? I'm going to be a seller. Thursday, am I going to be a buyer or a seller? Seller. On Friday, am I going to be a buyer or a seller? I'm going to be a buyer. Look at the difference. Look at the difference. Every single day. 4 days out of this week, 1, 2, 3, 4 was sellers. All sellers market, except for Friday. Talking facts. You can't argue this because it shows in the price action. Price is at a discount for Friday. Price comes what? Back up into premium and then sells back down and then closes and finishes off to the day. But I want you to notice something again. The same thing I showed you with GU is occurring here. So if we look at GU once more, for those that didn't see, that's that mitigation block. The two down close candles right here before this large rundown, right? You see that? Boom. Large rundown, boom. Price runs right back into it. And then if we look right down here, look at gold, you're going to see the same thing. Leave the indicators alone. Tell them again, Aaron. Tell them again. Because they don't need indicators. The indicators are making them lose. I'm telling you, the indicators are making these traders fail. Fail. They're chasing nonsense. It's a lagging indicator. You're gonna use an indicator that's lagging in data. By the time the RSI moves over, the market already moved. That's foolish. That is very foolish. That's not a real business move, in my opinion. If you're a real businessman, you get things done right there and then. You don't rely on something that's lagging. You want the best odds scenario, and indicators don't give you the best odds scenario. Look at what happens here: high, low, quick repricing. It's the same thing. Look at this, all the way down here, comes up, takes out Thursday's high, quick repricing. Where should your eye be focused on? The low, where it rallied up from. The last down close candle, I'm going for the largest body too. The last down close candle, the largest one here, right there. Look at what price does. Let's say we're taking this whole range, the wick and the body, the whole thing. What happened there? Comes down, up, boom. And what happened Friday? Friday, everybody saw from Thursday to Friday, everybody told themselves, I need to be a seller on gold on Friday because Thursday is dropping. And what happened? Foolishly, they woke up in the morning, jumped onto the MT4, went max margin, and went short. They went short in a discount. Why would you do that? Why? Why would you do that to yourself every time? I'm going to show you guys this every week. And I guarantee you, people are going to come back into the chat and they're going to be like, wow, I just learned something so simple that kept me in trades and kept me out of trades. Price comes down here, right? You're most likely looking for a buy setup. Perfect. But look at the mitigation block right there, man. Boom, price comes up here. Boom. Why is it a mitigation block? Because the people that were buying here, everybody that won something here, they made profits here. Hypothetically, let's say there's a couple traders out there in the world that still have their long positions open, right? Let's say the commercials, for instance, because they're the one that controls price. The commercials are long. They made profit here. But then they also went short too. So they're counter trading, right? They're always buying and selling. They sell it too, right? So now they're in drawdown from their long position. They're in drawdown from this long position because they went short too. What are they going to do to recover their losses? They're going to wait for price to come back up into that, get out the long, and then sell one more time. That's it. That's all they're doing here. They're mitigating their losses. I want to slow that down again for people that didn't understand. It's coming down and coming back up. Then it's quickly being repriced. This is a market maker. Let's take that same concept. Market maker repricing. Because it's quick. We know somebody with large pockets. It ain't my pockets, I'll tell you that. It's not my pockets that's moving this price action. Price then drops. There's no best indicator than S.O.P and M.O.P. Absolutely. It's your natural price indication. Your natural price action indication. Price moves above minute opening price for Thursday, breaks the previous daily high, takes out buy side liquidity, and what happens? The market makers reprice for lower prices and a premium, sells off real quick. What does everybody and their mother do? Right here. Everybody and their mother is going to go short on Gold Friday. I guarantee you that. And what happens Friday? They go short as soon as the market opens, or they're even chasing price. Let's say they're in profit here. They're in profit all the way here. They're profit. They went short here. Okay, let's say they get a quick scalp. Odds are that's poor trading. They're psychologically they're greeding over the market because the fact that they're even getting into the market outside of a kill zone, you can tell that they're greedy. You can tell that they're greedy. You're trading outside of a kill zone. You're trading all in New York lunch session. You're getting greedy. Let's say Asian session comes around. Okay, they win a little banger. Asian session, okay, they win a banger. Cool. But I know human beings are what? Emotionally greedy. Everybody wants to make money. Everybody wants to make peas. Everybody wants to make pesos. Whatever currency you have in the world, everybody's trying to make money. Everyone's trying to be a millionaire in two trades. And what are people trying to do? They're holding their trades. Let's say they're up $2,000, 5 grand, 50 grand. And they're like, yes, it could keep dropping. It could keep dropping. And what happens? Price goes back up, returns back to the entry. So now they're at break even essentially, right? And now it comes back above. Now they're in drawdown. What happens? The hands start getting sweaty. Their heart rate starts going up. They start tapping. They start biting their teeth. They start biting their nails. They start tapping their foot because they know they're in drawdown and they know they over leverage. Whenever you're in a trade position and all those physiological responses start appearing, you know you did something wrong. Your body's literally telling you that you did something wrong. You can't sit here and tell me you didn't because you over leverage. You know you shouldn't be having an account. I mean, not an account. You shouldn't have a position open with more than 3% on in one trade. You're gonna blow your account quick. You're risking 3% of your account, 4%, 5% per trade. You're not going to last in this game. This is a business for a marathon. This is not a business for sprinters. I don't I don't care how good you can scalp. Eventually, that scalper is going to feel the pain one day, someday. I don't know when that day is, but eventually it's going to get to them because they're scalping all day, and then eventually what happens? They win big one day, and then all of a sudden, in the next 2 hours, they tell themselves, "Man, I won big. I won 10 grand today. Man, I could make another 10 grand, or maybe even an extra $1,000." They get into the market, they lose 1,000. They're like, I could do better. Then they lose 10 grand. The entire 10 grand happens to a lot of traders. Happens to a lot of traders. But no one's sitting up here talking about this stuff. No, you're going to see people go on live streams showing you indicators and this. I caught this trade using the M.O.P. You didn't catch that trade using the M.O.P. You got lucky. You got lucky. There, you flip a coin. 57% of the time, you're going to get right. 57% of the time, odds are you're going to get it right. You're either a buyer or a seller. And 57% of the time, odds are you're going to get it right. And you got lucky. Price comes back up here, sells off right there. Back into premium, gives a nice reaction. When is this occurring? London session, New York session, London close, and then you can see the market closes with an up close. So that's your typical week normally. So if there's any questions, please let me know. Don't hesitate to ask. I hope that you guys did see something informative. I'm going to be doing this every Friday. Every Friday. It may sound boring. People might, oh, this is boring. I want to learn something new. Well, this is what's actually making you find trade setups. Those people are telling you nonsense. Telling you. If there's any questions, please don't be afraid to ask. Please. So I'm just going to jump right down into the monthly perspective of what I think certain pairs are going to do. Just as a quick conclusion, U.S. oil. Let's start off with U.S. oil. U.S. oil right now, bullish order block. We're below equilibrium. So a lot of people may ask, okay, how did you get this magic line on your chart here? What I did was I just took a fib from the most dynamic price action, swing low to swing high. I'm including the wicks here. You could do the bodies if you want. Oh, it's all up to you. I'm going here to here. I'm cutting the range in half. I should bring this down because it's off. Bring it down. There we go. I'm cutting the range in half. And anything below 50% is discount, and anything above is premium. You can see price makes a swing high, and now it's coming back out of a premium because it makes a swing high, turns around. It's in a discount. U.S. oil has been sitting inside this last down close candle for a couple months now. 1, 2, 3, 4, 5, 6. 6 months. It's prepping up for something. It's accumulating. It's prepping up for something. It's range bound. But it's range bound inside this candle because that's where the last institutional buying has occurred. The last down close candle before the run up. This is where your eyes should go every time. So U.S. oil has been sitting here for a while. I've been plotting on a very long trade to go up here. I would really hope that it doesn't do that because that would really hurt the global economy if oil gets that expensive. But this is what price is doing right now. It's just consolidating. Now, if it was to fail, it's going to break this swing low. But I could see that price is respecting 50% of this candle. Now, how am I getting 50%? I'm just going off the body. from here to here, open to close, mean threshold, cutting that candle in half. That's your bullish order block right there. From the open down to the mean threshold, that's your bullish order block. I don't care about the high. Go watch ICT's videos. He'll tell you it's not the high because it's more body. It's not more wick. It's more body. So you're concerned about the body of the candle. The open of the candle down to the mean threshold, that is your true order block. This is your true order block. Anything below the mean threshold, it's not your order block. That's your order block. Go watch the ICT high probability order block, and you'll see exactly what I'm talking about here. Price comes down and looks like it's trying to turn. You see how it's trying to make like a swing low to go higher. So if price were to go higher, I would like to see the previous monthly high broken. Correction on spelling. Overboard, not over. I appreciate it. Thank you. You don't be afraid to correct me, guys. I am not perfect. Do not be afraid to correct me. I am just another human being just like you. I appreciate it. Thank you on the spelling. I will look at that next time. I would like to see this high. Not this high. Is this high? Yeah, this high here broken. Because 1, 2, 3, this looks like the swing low formation. There's a lowest low in the middle. There's a higher low on the left, and there's a higher low on the right. Let's zoom in so we can see that. That's a swing low. 1, 2, 3. But it's not confirmed yet until this middle, the lowest one, its high is broken. If this high is broken, odds are US oil is going to give us a run to this swing high up here. That's what I like to see US oil run up to. And that high is going to be 93.73. So let's say we'll call it 90. Right? I would like to at least see US oil run back up to 90 if we get above December's high. That's where I would like to see it. We're in a discount. So high odd buy scenarios are unfolding down here. So in the next couple months, I would like to see US oil get above December's high. If we get above December's high, I think, I'm not saying the sky is the limit, but I would hope the sky is the limit because that's what I'm speculating. What else do we got? Talk about DXY briefly as well. Monthly chart. Same thing that I'm doing here. I'm taking the most dynamic price action that I have, the most dynamic swing low to swing high. This is the one I chose. It's only perspective because you may choose a different swing low and have a different range. This is the one I'm looking at. I cut that range in half. That's equilibrium. Hopefully I spelled that right, Gemini. Mance is checking me on my spelling. Appreciate that. Price then comes back down below equilibrium, so it's in a discount territory once again. So up here, price dollar is too expensive. Down here, dollar is cheap. So I would like to see dollar run higher. We do have a down close candle. We do have a fair value gap. I'm busy. Buy side imbalance, sell side inefficiency. Oh, the month. Ah, man, I'll get into that too. The monthly confluences. So we have 1, 2, 3, 4. 4 months down. So eventually there needs to be a change in trend. Normally the market's either going to give you up close, down close, up close, down close, like this. You see this pattern here? Up, down, up, down, up, down, up, down, up, down, up, down, 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 down. So there's obviously a shift occurring here. There's patterns and cycles to the market. You can see the most obvious patterns. I'm expecting or anticipating a quarterly shift going into this year for DXY. I want to see DXY because it's cheap again. DXY is now cheap. So that means commercial speculators are most likely looking at it. And since the Feds have probably one of the highest interest rates, and plus the DXY is the world reserve currency, it's backed by a lot of things. And it's backed by gold. It's not backed by gold. I'll take that back. Price then rallies. They're foolish for not backing it by gold, but whatever. Price is going to rally. This is the opening price. I would like to see price drop below the opening price and give some type of daily swing low setup here, right? So on the daily time frame, if we were to look at the daily time frame briefly, because I don't want to get into this, but since somebody asked, I don't mind answering the question. Look at February. Let's find the opening price for February. The opening price is right here. Look at the swing low formation below the monthly opening price. That's not by chance. Not by chance at all. That's a discount. It's the same thing. Like Aaron said, there's a monthly confluence. They're buying at a cheaper price for the month. They already know that they want price to go higher. They already know. But where are they going to buy? They're going to buy below the opening price of the monthly candle. So February opens right here. This is February 1st, Wednesday, 2023. It opens, it drops all the way down here. And then what happens? They buy down here. So your ideal buy setup, if the month is bullish, your ideal buy setup is below the monthly open. It's the same thing from the weekly time frame, the daily time frame that I was showing you with S.O.P. It's the same thing that's occurring here. Your ideal buy is below discount. So if you go up, I'm going to show this right here. Your ideal buy, same thing here. The weekly open is here. They drop price down. It's oversold. Boom, price red is back up. Same thing here on the monthly. It drops down. This is February 1st. Yeah, man, too funny, man. The price drops below the opening price right down here, right? And price then runs higher right up here. But it creates a swing low after taking out what? All these equal lows here. So the month of January was pretty much sideways. At least towards the end, you can see here. It's sideways. Look how January at the end, oh my gosh, the beginning of the year, choppy. Which is why not a lot of people, this is why ICT is telling traders, leave January alone. Stop trading in January. The market is most likely going to be choppy. It's the yearly open. Markets are still trying to figure out where it's going to go for the rest of the year. And we don't know, especially within the circumstances of what's going on in the world, a lot of things can happen. You can see it's consolidating. Price breaks that consolidation with a large candle, not a small candle. Think about this. It does it with a large candle. Consolidating, large. Why did we get this large down close candle? Because they want you to chase price. That's it. They want you to chase price. They want you to think that the dollar for February is going to go down. But it didn't. What happens the next day? Large up close, boom. And what happens? People start chasing price again. Price consolidates, small range cycle. And you need to wait for a large range cycle. You're not making a lot of money. Unless you're a good scalper and short-term trader on these small range candles. These small range candles are small. These large range candles is where the millions are being made. Millions. They're making a lot of money in those large candles. The small range candles, they don't care about that because they're accumulating and putting the market in reaccumulation, right? Just for them to build up their net longs and build up their net shorts once again to then take price off again. That's what's going on in these markets. Doesn't take a rocket scientist to see that. They tricked everybody that dollar was going to go down. It drops below the opening price. Everybody's chasing it with a large candle. Like I said, the large candles is like a dog looking at its favorite toy. It entices the public eye to be like, wow, did you see that large move on dollar going down? Yeah, bro, I saw that too. Yo, you think we should go short tomorrow? Yeah, heck yeah, man. Let's go short tomorrow. What happens? We go short tomorrow, we lose our entire account. We thought we were going to be rich the next day. We are not rich the next day, unfortunately. This business, 98% of traders are failing. It's a tough game. It's a tough business. Price runs up here and then swing low. Let's see. Yeah, take account to the yearly open too. It's the same thing. It's all fractals. And I'm gonna get into that too, Aaron. We'll get into the yearly chart as well. I'm gonna look at a few pairs and I'll show you guys what they're doing to people every single time. Every year they're doing it. Every month, every day, they're doing it to people every day. But we, the masses, the public eye, we're foolish to this. And I can only be thankful for those like ICT, Michael Huddleston, Larry Williams, those that came before me that figured out these market patterns. I really appreciate them, because without them, I would have no idea what I was doing. Back to the monthly chart. I'm going to end up deleting all this. Delete. But you can see here, look at the candle itself. It opened down here and it dropped down. Look at the wick. It opened here, it dropped down. And where did it drop down into? A PD array and a discount because it's below equilibrium. It's a fair value gap and a discount. That's a buying opportunity. Price drops down into it, gives a nice reaction, and then it runs higher. Now, on the lower time frames, you would look for a session, whether that's a London session, Asian session, New York session. You're looking for a session for when price hits this, or when price breaks a previous daily low, and then it runs higher. And that's what you did see here on the daily, right here. Price comes in January, February. Look at February. Breaks this daily low, breaks this daily low, breaks this daily low, breaks this low. And if anybody can tell me what Larry Williams setup this is what? This is a smash day buy. Smash day buy. Why is this a smash day buy according to Larry Williams? Larry Williams would say this candle, like I said, it all goes hand in hand. There are many confluences. This is a large range cycle. It's a large candle. So everybody in itself, they're already hype. They're hype. They're like, yes, dollar's finally going to crumble. The U.S. economy is finally going to fall apart. We've been saying that for a couple years now, right? But you can see price comes down. It takes out how many lows? It takes out this low. 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 If you can get it there. It takes out all these lows. And what happens? Price goes back to the candle's high and they blast it back up. Everybody, most retail traders see this as what? This is probably going to be heavy distribution. Why does it look like heavy distribution? Because of what I just said. Its closes well below the last 3 to 8 day candles lows. The last 3 to 8 day candles, their lows, this close is below it. This in themselves looks like an extreme sell setup. This looks like an extreme sell setup. Everybody thinks that this is going to sell. But what happens is the market turns around and does that. And Larry Williams would say if you see a candle like this on the daily time frame, you just set a buy limit here. You buy in on strength. And you get into the market on strength and you hold. And that's exactly what Larry Williams was teaching about in his book there. And as you can see, we also have a fair value gap here to here. Price touches it with a swing low. And you'll notice that too as you start looking at the daily time frame or any time frame normally, it's going to be a 3-bar pattern how it mitigates the PD array. See how it makes a swing low formation while hitting the fair value gap? Because what did this day do? It took out the previous day's liquidity here to run higher. And look how they don't want price to take out this low. They want it to take out the high instead. It takes out the high. Odds are there's higher prices coming for DXY. So that's what I'm speculating on the monthly chart at least. I want to see price run back up into this fair value gap here. So on the monthly chart, for me, the draw on liquidity is this clear fair value gap here. That's in a premium. I'm pairing a discount PD array to a premium PD array. I'm going from a discount to a premium. So I want price to come from down here to go up here. So if I look, let's look at another pair. UJ. Let's look at UJ. Same thing. It's a BPR, balanced price range. 2 fair value gaps together. You see this as well. I take this swing low to this swing high. We cut that range in half. That's equilibrium. For those that are joining, I'm just going over the monthly draws that I'm seeing as a conclusion. Equilibrium, anything below 50% is discount, anything above is premium. You can see price makes that swing high formation. That the middle candle here, its low is broken. The next candle goes short, and we get back down into a discount. We just took out a swing low here, 1, 2, 3. Swing low. There's sell side liquidity below this low. We do have a fair value gap here, and we have a fair value gap here. I just didn't mark it off. I want to keep the charts clean. Price could ultimately still reach down into this, but this could be enough for the algorithm, taking out this sell side liquidity to start running price higher, to get back into a premium, to run back into this fair value gap here. And if it doesn't respect this balanced price range, it's going to run the high. Because UJ, in my opinion, the dollar is outpacing the Japanese yen. They don't have their negative interest rates right now, and the markets, foreign exchange market, chases interest rates. So if the currency that you're trading or the pair that you're trading, you just want to look at the interest rate. So we know that the Fed's is at 4 point something, Japanese yen is at negative one something. So we're not going to be looking at that. So if we were to go here, let me go interest rates. You see here 4.7 right there. And then you go Japanese, the Bank of Japan, negative right there. And they have yet, out of all the central banks, the Bank of Japan, the central bank, has not moved their rates yet, which is why economically they're struggling. They haven't raised their rates, so investors are not looking to put their money into yen. They're going to put their currency in other places where they're going to get a better rate of return. You're getting a negative rate of return putting your money into Japanese yen, which is why UJ took off. You have that bullish super cycle right here. So if you would have caught that, oh my gosh, whew, good play on you, you know. But I want to see UJ become bullish again and run back up into this fair value gap first. And then I'm going to see how it performs when it gets here again. And if it doesn't show any reaction to want to go lower by that time it gets here, then I'm still thinking it's going to go long. But this is a long-term play. This is the monthly draw. And go next. We got pound. So like I said before, I'm trying to break up the most dynamic range that I see. So when it comes to drawing fibs, it's always going to be subjective. It's not objective. People draw their fibs differently. I just take the simple approach by taking the most recent swing high and most recent swing low where I see the most dynamic price action. So I said it was this one to this one, which is how I got this equilibrium line here. We're in a premium for this range. This leg here is a premium. This is discount. This is premium. High odds sell scenarios should form above equilibrium or at equilibrium. So you can see we take out a swing high recently. There's buy side liquidity above it. There's a potential swing high forming here. Now, in order for this swing high to be confirmed for lower prices, I would like to see this candle's low to be broken right here. I want to see this candle's low get broken by this monthly candle here. It may not happen in February. It may happen in March. But I want to see this low broken because we have a fair value gap right here. So I still think there's more potential for it to draw down in here. I could be incorrect because if I am incorrect, the odds are it's just going to keep going to where? The next PD array above price. That's a fair value gap. There's speed here. There's a gap in price. Price can reach up into that on the monthly chart. We got gold. So you got a classic ICT rejection block. So you got a large wick up. So we can see that large wick up. Double top right here. Large wick up. Price comes up into that and gives a dynamic reaction because price does this. Gives the wick. Price comes up into it, but then it runs away for months too. This is 7 months down. 1, 2, 3, 4, 5, 6, 7, I think. Yeah, 7. It only took 3 months for it to recover that liquidity void. Price comes up, fills in the liquidity void, hits into the rejection block once more. I think that price could probably continue going lower. If the dollar is still strong, it would check gold to go to lower prices, in my opinion. 1, 2, 3. So we have a 3-bar move up. Is this a quarterly shift? Is there a trend unfolding here? Is this where the market now makes a top and makes a lower swing high? Doesn't break any swing highs here. There's no swing highs here to be broken. The swing high is up here. But it does break swing lows. Broke this swing low here. 1, 2, 3. Price breaks it. So we need to see a lower swing high form. We have yet to see one form. So we would like to see a swing high formation form. So maybe next month, the next candle opens, it runs up, it gets close to this high, but it doesn't break the high. This high stays intact. And then the next candle takes out this low here, enforcing and making the swing high confirmed, and then lower prices are going to come because now it's going to go back into a discount once again. So it's going from a premium right? High odds sell scenario is a folding here. All this is high odds sell scenario. You don't want to be buying here. It's too expensive to buy gold. By this range, at least, from this high to low. I'm going to show you how I drew it. I took the swing high and I took the swing low. That's how I got the equilibrium line here. So it would be too expensive to be buying gold at this price point right now. If you were an investor for gold, you would wait for price to get cheaper, right? You would wait to buy gold at a cheaper price. It's just sound businessman. A sound businessman is not going to buy at a higher price. They're always going to want to find the best price possible. You're not going to buy. You're about to go buy a new house. Are you going to buy it above market value? That's insane. That's nonsense. You wouldn't buy a new house. You're about to go buy a new house in a new neighborhood with your wife or with your husband or whatever the case may be, and you're going to buy the house at above market price? Doesn't make sense. Oh, snap. It's 9:25. Whoo! All right, man. Man's just running late, but it's okay. At least then I'm helping people. But this is gold. I want to see price get back down here to a discount. What else do we have on here? AU, same thing here. I wanted to see a swing high form, and I want to see price drop lower. Right? Is this potentially the turning point here? Is this a quarterly shift? 3 up close candles. You'll see this trend occurring because all the pairs are doing it right now. 3 up close candles, just like gold. 3 up close. DXY had 3 down. GU has 3 up. The Z and dollar has 3 up months. And is this the time where market now is going to turn around and start the underlying trend to go lower? Is the trend still bullish or is the trend bearish? I think the trend is probably still bearish. I think lower prices can still be met. And I think, did I do GU? I did do GU. UJ, I did UJ. I did DXY as well. Yeah, absolutely. Nice. Good evening. Man, you're late to the party, fam. Because I'm about to go to my party. Whoo! But just to recap, like I said, every Friday I'm going to be here showing you guys this every single time. And this is going to literally show people when to get into the market, when not to get into the market. Always mark this out in your chart. Sunday's opening price. Don't wait. Don't wait to mark out Sunday's opening price. If you're getting into a trade during the week, always think back to what I'm showing you right now. Where am I in retrospect to where Sunday's opening price is? Is the price action above Sunday's opening price or below? And I know, thank you for the spelling. Spelling is incorrect. Thank you. I appreciate it, Gemini, once again. For anybody else who's going to say, oh, he spelled it wrong, thank you. You can see price is above in a premium, and you can see here Thursday, high odds sell scenario. Same thing here. Price comes up on Tuesday. It gives a nice reaction down. We'll go on to the next one. UJ, same thing. Where did the high odd sell scenario occur? Above Sunday's opening price. That's where it's occurring. We'll take off the session indicator so we can see that. Right there. Monday. Overbought. Sells down. Cool. DXY. Same thing. Tuesday makes the high of the week. What does it do? Sells down as well. Takes out the previous daily high. Look how it liquidates the high. It's above midnight opening price once more. Runs up, comes down. Now, I know many people have already heard me say that, but I'm just saying it once again for those that just joined because I'm about to end. I just want to make sure that they got a brief description of what I'm saying. Price comes up above midnight opening price and sells down because it's overbought for the day and for the week. That's all I'm doing here. Every single week you need to be doing that. Now, let's say, hypothetically, because I know some people are much older than me, and most people probably have other things going for themselves. Either they're running a business, maybe they have children, maybe they have a job, a 9 to 5. What can you do to trade? You simply wait for a price to hit a certain area where you want to go short. So let's say, hypothetically, like I'm saying, I'm not saying that you're going to get it right because there are going to be weeks where you get it wrong. Let's say you don't have time to trade Monday, Tuesday, Wednesday, Thursday, Friday. This is my last video talking about Sunday's opening price. You set a sell limit Let's say you said this weekly candle that opened is going to go down. You set a sell limit above Sunday's opening price, whether it is 15, 20, 30, 40 pips above price, whatever it is. You get into the market on strength and you get hit into the market. You're going to have a hefty stop loss. It's going to have to be anywhere from 100, 120, 200 pips, and you're going to hold all the way to Thursday, because normally Thursday is going to be the low of the week when bearish, or Thursday is going to be the high of the week when bullish. That's your most classic week. Most weeks may not be like that, but that's the week you're normally trying to get. But you're going to be able to encapsulate all the pips going down to the downside. Same thing here for GU. If you were bullish for the week and you didn't have time to look at these markets, set a limit below Sunday's opening price, whether it's 10, 20, 30, 40, 50, 60 pips. I'm not telling you what pip range you need to pick, because I am not a financial advisor. I'm not sitting here telling you what exactly to do. But pick a number that you think works for you. Set the right amount of risk on that trade. Maybe it's 1%, maybe it's 2%, maybe it's half a percent. Whatever that percent is, you get into the market on weakness because you're buying. So market comes down, it gets down to 10 pips, you're in the market long, you have a stop loss of 100, 120 pips, and then you hold till Thursday. And you can see here, you can probably encapsulate a large portion of the range expansion here. And you call it a day, and you close the position, and you do the same thing next week after week after week after week. Eventually, you're going to be compounding because you're getting in at the best price possible. Especially if you're right. If you're right, your odds are you're going to make some profits. But if you do see the market going against your stop, and it gets down to, like, let's say you have a 100 pip stop loss, and it gets down to like 80 pips down into your SL and your drawdown, you may want to close it. If you want to close it and you have faith that it's going to probably keep going down and target your stop loss, then get out early. Why watch price action go all the way down to your stop loss? Most of the greatest traders in the world always tell you this: they cut their losses early. That's it. They get in the market, oh, it's not working for me, I'm out. See you later. Cut the losses and move on. Move on to the next week. You may not be available to trade the current week, but move on to next week. It's not like you're gonna pass away tomorrow, God forbid, But it's not like you're gonna become a millionaire in one trade tomorrow. It's gonna take time for you to generate that wealth or accumulate an account that you're able to eventually. I hope the goal is for most people, at least it is for me, find financial freedom from trading. Eventually, your account size will get there. Your live account will get there. Your prop firm account will then help you fund your live account. That's the main goal. The main goal is to get the prop account properly, use someone else's equity, use the money and the profits and the payouts to then fund your live account so that you don't have to depend on the prop firms, because they're cutting a portion of the pie. They're taking 20% off the top. That's ridiculous. 20% off the top, man, that's a lot of money. From a business standpoint, 20%, and I'm only getting 80%. I don't want you guys getting more than 5%, if anything. But 20% is huge. But that's the main goal everyone should be aspiring. That's what I'm aspiring to do. I'm taking all the funds that I'm making, all the payouts that I'm making from FTMO, throwing it into the live account. So then eventually one day I can say I don't need FTMO anymore. They don't have to keep cutting into my profits. You want ownership. You want to own your account. Anything that you're doing. I don't know if you're a content creator. I don't know if you're a musician. I don't know if you're someone that owns a clothing brand. Whatever it is, you want ownership. And the same thing comes for trading. You want to own your account. You don't want another man or woman controlling your account and when you should get your payout and how much they should take off. So this leads me to the end. It's 9:33. I said I was going to stop at 9. I have family obligations. But I hope you guys learned something new today, man. It's your boy Deontay, Forensic Forex, signing out, man. Peace, man. Another successful Forensic Forex. You'll see me here again every Friday, 8 p.m. 8 p.m. You can't miss me. Peace.